Hello everyone, welcome back to Finance Dean Smith. Today's top story in the markets is that Donald Trump wants to fire Federal Reserve Board member Lisa Cook. Cook was nominated by President Biden in 2022 and confirmed by the Senate in May of that year, becoming the first black woman to serve on the Fed's Board of Governors. She's considered one of the very few prominent black female economists in the United States. Just 10 days ago, the Federal Housing Finance Agency FHFA accused Cook of mortgage application fraud. The charge is that back in 2021, she declared two different properties in two different states as her primary residence. One in Michigan, and then 2 weeks later, another in Georgia to qualify for favorable mortgage rates. Now, that incident took place a year before Cook joined the Fed. It did not happen during her tenure, but Trump has seized on the accusation. He posted a letter from the White House on his community platform, showing his intention to remove Cook immediately. In that letter, signed personally by Trump, he cited the Federal Reserve Act, claiming Cook's actions constitute financial fraud and potentially criminal behavior, which makes it impossible for him to maintain confidence in her. If Trump does succeed in removing a Fed governor, the consequences could be major. Out of the 7 Fed governors, 4 would then be his allies. Governors Waller and Bowman have already openly dissented at recent FOMC meetings, signaling their alignment with Trump. Another governor, Kukla, has already stepped down, and Trump replaced him with his close confidant Milan, the chief author of the so-called Mar-a-Lago Accord, a policy framework that mirrors Trump's economic philosophy. So if Cook is ousted and replaced by another Trump loyalist, Trump would effectively control 4 out of the 7 permanent Fed votes. And remember, monetary policy decisions are made by 12 total votes, the 7 governors, the New York Fed president, plus 4 rotating regional Fed presidents. That means Trump would have a real majority influence on monetary policy. This would be a direct threat to Federal Reserve independence. History gives us a clear warning here. Back in the 1970s, President Richard Nixon pressured Fed Chair Arthur Burns to cut interest rates. At that time, unemployment was at 6.1, inflation was at 5.8, both pretty bad. Nixon wanted easier policy to help him win re-election in 1972. Burns initially resisted but eventually caved and cut rates. The short-term effect was a stock market rally and a boost in confidence, but it fueled inflation. By 1973, with inflation and the oil crisis, the U.S. stock market collapsed. Indexes were cut in half within 2 years, bonds crashed, and the dollar plunged. When the Fed finally tightened, it was already too late. The economy fell into stagflation, high unemployment and high inflation at the same time. That crisis showed what happens when the Fed loses independence. It can't guide the economy with authority, and markets lose confidence. That's why today's market is nervous, worried history might repeat itself. This explains why U.S. stocks dropped after the open today, then recovered by the close. Markets were digesting the Cook news, but there's still a big legal fight. Cook has already filed a lawsuit, arguing that the alleged fraud took place before her Fed service and that it does not meet the legal grounds for dismissal, which are things like misconduct, neglect of duty, or inefficiency, not pre-tenure personal issues. If Trump fails, the Fed's independence is preserved. But if he succeeds, investors may have to start reading Trump's posts alongside the Fed chair's statements to understand monetary policy. That would throw markets into chaos. Meanwhile, Trump was in a very good mood after securing a 10% equity stake in Intel, in exchange for subsidies, boasting that he made America $11 billion richer without spending a dime. Today, Commerce Secretary Lutnick said the government is considering taking equity stakes in Lockheed Martin, Elment, Boeing, BA, or Palantir Pleader. Lutnick claimed that 97% of Lockheed's revenue comes from the U.S. government, basically making it a government department. I checked. The real figure is closer to 74, not 97. So would government equity stakes be good or bad? In my view, mostly good. Just look at Intel. Its stock rose after the government became a shareholder. Investors like the stability of being a national champion. For Elment, which already relies heavily on government contracts, this would strengthen its position and reduce competitive risk. Personally, I've been holding Elment, but so far it hasn't turned profitable for me. If Trump comes in as a shareholder, that might finally let me exit at a profit. Elsewhere, Bloomberg reported that hedge funds are massively shorting the VIX index. Their net short positions are now at the highest since September 2022. Remember, VIX is the volatility index derived from S&P 500 specs options. A high VIX above 30 signals market fear. During crashes, it can spike above 60. But in calm markets, it stays low. The pattern is always the same. long periods of calm, then sudden spikes. If hedge funds are shorting VIX, they're betting volatility will keep falling and that the market won't suddenly crash. Because if stocks plunge and VIX spikes, short sellers would face huge losses. In corporate news, Unitil Thun was rebounding earlier today but plunged $7 in the last hour of trading. The Department of Justice is expanding its investigation into Unitil's prescription management and reimbursement practices. The review now goes beyond potential Medicare fraud. Importantly, no executives have been accused of wrongdoing, and an investigation doesn't necessarily mean charges will follow. Remember, Warren Buffett owns Unitil, and his purchase price was even higher than today's $300 level. In other words, buying here is effectively buying below Buffett, while near-term headlines could weigh on the stock. Management has guided that earnings will recover by 2026, that suggests long-term upside remains intact. Looking ahead, Apple's Apple annual launch event is set for September 9th, where the company is expected to unveil the iPhone 17 lineup. Analysts say the new iPhone 17 Air will be only 5.5 millimeters thick, making it the thinnest ever. The launch event kicks off Apple's holiday sales season, which usually boosts stock performance. Historically, Apple shares tend to rise around product launches. And finally, my longtime partner Interactive broker Zibker is joining the S&P 500 index. Officially recognized as one of America's 500 most valuable companies, the stock trades at around 33 times earnings. A premium but supported by strong long-term growth. Index inclusion should bring a wave of ETF passive inflows, likely lifting the price further. For full disclosure, my own public trading account is with IBKR if you want to learn more about Interactive brokers. Check out the pinned link below this video. That's all for today's episode. Thank you for watching, and I'll see you in the next one. Bye for now.